Where do you think we are, Fred, in terms of the regulatory shifts that we've seen in China? Are we still in the middle of this, or are we coming towards the close now?
Well, I think we have seen most of the regulatory initiatives, whether it's anti-monopoly, tightened data security, stronger consumer privacy protection, and so on and so forth. And the markets, have by and large, digested the fallout, the impact. And I believe the digital economy, which, as you know, is 40% of the GDP and one of the biggest in the world, has also managed to adapt and adjust amid all the uncertainties.
Fred, great to speak with you this morning. So most of the shift from the regulatory side has perhaps taken place. What about from the tech companies themselves within China? Are there more transformations that you expect them to do in order to keep up with the regulation, or is that mostly finished as well?
Yeah, I believe all the entire tech sector has also adapted. Many of them have responded to the recent regulatory changes and undertaken serious in-depth review of their business model, their business practices, and how they use data, and so on and so forth, to bring everything more in compliance with the regulations. So I believe they have come a long way, but there's still some work to be done. And so in the meantime, you will continue to see some of the choppy results from the sector, and but I would say the biggest risks are maybe behind.
OK, the biggest risks may be behind us. After a stellar year, Fred, in 2020 for IPOs and listings out of China, obviously there's been a significant slowdown, particularly within the technology space. And I'm thinking of a number of names that are part of the Primavera portfolio. So Ant, of course, Lufax, SenseTime. Given what you've just said about the adaptation of these companies to the regulatory changes, can we expect that 2022 comes back as a year for public listings within the tech space in China?
Yes, very much so. As China remains a major engine of innovation and technology change, right? In terms of R&D budget, in terms of number of new startups, in terms of number of unicorns. Yes, there's been a significant sell-off in the public market in reaction to very strong regulatory crackdowns in recent months. But the medium-term trend of innovation, the enormous amount of human capital and accelerated digitization of the economy, as part of the COVID environment, all remain intact. So I do see more companies, when dust settles down, the market conditions stabilize, will be able to tap the public market again with the many new IPOs to come.
OK, I wanted to get your views, Fred, on one particular company, DD, which I know you've backed and which successfully beat off Uber in the Chinese market. There was some reporting from our team suggesting that maybe it's going to be delisted from the US and maybe it's going to be backed ultimately, or at least taken over by state-backed firms. I just wonder what message you think that sends investors, and if you're concerned about the messaging that might send.
I'm not close to the specific situation of DD, but in general, I would say the Chinese government is still receptive to the transformation of urban mobility through shared ride-hailing platforms to reduce urban congestion, to reduce pollution, and also pave the way for autonomous driving, right, which is really the future. At the same time, there's also heightened concern over data security and user protection, including personal safety protection. So I expect that the company obviously will be in close consultation with the relevant government and regulators to really overhaul the data protocols and the security arrangements to make sure to allay and address relevant concerns. So that will take some time, and I'm cautiously optimistic. There will be a constructive compromise to be reached in the near term.
Fred, I know you're also bullish on the Chinese economy as a whole, but does the presence and continued new variants of COVID and possible mobility restrictions in China, does that threaten your view at all?
Well, absolutely. In fact, after starting, strong rebound in the first half of this year, and we know the economy really hit a soft patch in the third quarter, mostly because of the Delta variant. Granted, for a country of China's size, the number of cases is just minuscule. Nevertheless, the government response has been nothing short of draconian, and the zero, COVID policy still very much in force. So with the new variant, I'm sure, on the one hand, China's strategy has worked very well to protect the country, to shield from the West, but on the other hand, the continued stringent COVID control does weigh down consumer sentiments and consumer spending. That really experienced the weakness in the third quarter, and I expect this will persist, in the Q4 and maybe even early part of next year.
Okay, so that pressure could persist. Fred, where do you see opportunities when you take into account all of these factors, whether it's the regulatory environment or the concerns around the outlook for China's economy? Where do you see the opportunities? Where are you investing at this point?
Well, the short-term, cyclical uncertainty aside, I'm still very bullish on the mid and long-term fundamentals. In particular, the emerging middle class right now is really half of China's population, right? The entire European population. Last year we saw Chinese consumers overtaking the U.S. consumers for the first time ever, become the biggest spender in the world. And that will very much continue, particularly when COVID hopefully subsides. That will be really driving economic growth and also significantly contribute to global demand. Number one. Number two, innovation, I mentioned earlier, again, very much in place. And finally, I see a lot of exciting changes in terms of climate actions. Everything from renewable energy to electric cars and the batteries. China clearly, given the sheer size of the economy, how dependent on traditional fossil energy and the big emission. So there's a tremendous bottom-up innovation going on and investment into the climate change space, and we have been on the forefront of tapping those opportunities.